It's been a long time, and I'm back with a video of sorts. And I hope to have the available time, headspace, and now new office space to be able to do this more often going forward. I have a few indexes and ratio charts between markets that I just want to run through, and as usual, do it with no script. Just pop the charts up and I will give my impressions on them and move along fairly quickly. So the ACWX SPY ratio is the ratio of global stock markets ex-US versus US stocks. Inauguration day, my little great again, not great again meme going on here. But the point is, this downtrend in global stocks versus US stocks began in 2008. And I think it blew off to the downside pretty much right around Inauguration Day, and shot upward. America not great again. Pulled back in a little resurgence of American greatness, and then went sideways, made a new high here, and beyond the shtick with the America Great Again jingle, we're changing trend, or it sure looks that way. Again, I'm not going to draw trend lines. All we need is the moving averages to show that, well, we had the bull cross here, the bull golden cross, and the obligatory pullback that cross would instigate, going against its original intention, but consolidation, new high, and what we're doing is bending the 200-day moving average upward. That's the major trend indicator. I believe a new era of global stocks outperforming US stocks is at hand. But the US dollar is going to have a lot to say about that. The ACWX SPY ratio, global versus US, tends to be pretty well correlated inversely with the US dollar. You can see after the FOMC, the USD tanked, but it is trying to find support at this clear support juncture, and its own 200-day moving average, which strangely enough is also trying to turn up. So let's keep an eye on these two. You know, somebody's off sides here, and we should find out soon who it is. Moving on, and I'm just going in alphabetical order, not logical order on this list, so bear with me if you would. Gold stocks, volume, wedge, breakout, minor support, and I will freely admit I had open some lower levels, 58, 55, if things got really bad, but you know, at this point, 1, 2, 3, 4, 5, and out. This looks like a real breakout, and the way to tell that is if it continues to hold the 200-day moving average, and also, humorously enough, here is the death cross of the 50-day average below the 200. It mushed around a while, and then there is the typical move counter to the negative implication of the death cross. Ignore that shit, is what I'm trying to say. Whether you hear golden cross or death cross or whatever, ignore it in the short term at least. You know, it may eventually come back and prove to have, you know, been a good guide in direction, but I think that in this case it's not, and often it doesn't. It's just a way to have the media harvest some eyeballs scare people. Oh my God, a death cross, which means really nothing, because this thing can easily come back up. The 50-day average in blue can easily come back up and cross above the 200. So anyway, here we are on GDX. It's a breakout. There was volume. It came off of positive divergence in RSI to this lower low here. We had a higher low in RSI, and off we go. Let's see how far we can go. And by the way, I am actually going to get out of sequence here. I'm going to go to the gold SPX ratio, which is telling us the macro fundamentals from this perspective and others. Gold, oil, possibly gold, copper, several other ways we look at the macro are indicating that the very, very good risk versus reward proposition we had been noting in gold due to this drop in the gold SPX ratio. This every leg down here reduced the risk in gold. Obviously, buy low, sell high, sell high. So risk in stocks was low here, theoretically speaking. Risk in gold, as this ratio dropped to our target, which was a higher low to the previous major low. Low risk in gold. Now that low risk is turning into a new macro phase, I do believe. And this little support shelf here would be the support to that assertion. And as you can see, it broke through here and came above the 50-day average. This looks nice for gold bugs, that is, not necessarily stock bugs. Now we'll go back to gold, nominal. It's breaking through resistance, which I should have probably marked as pretty much not a done deal, but on its way to being, if it holds, the next objective is the 200-day average. That's really important. I'm not a big trend line guy, but you break through this, the junction of the SMA 200 and this trend line, and I won't say the sky is the limit, but that would be very positive for the gold price. Gold, silver rolling over, which is what you would want to see if you are a precious metals bull or a commodities bull, which I am, especially in the strategic minerals and whatnot there. Rare earth, lithium, and it's early in the morning. Why can't he think of all the others? The PGMs, nickel, and what am I forgetting? It's probably my favorite thing. And I'm going to move on now because I'm having a brain cramp. This is a TA video anyway, so don't get hung up, G. Gold-silver ratio you want to see rolling over. Conversely, the silver-gold ratio has been in a little pattern, and it hasn't broken through yet, but the chart is asking the question, was that the bottom right there? May well have been. RSI is guiding upward. MACD is crossed upward and trying to go positive. So we want to see happen here what happened last year, 2025, when it doesn't look like much here, but at the time that was quite a serious plunge in silver versus gold. What we did at that time in NFTRH was we looked at historicals, which showed that at some point after a real tank job in silver relational to gold would come a rebound just as strong. And so we ground around in the spring of 2025, came upward, broke out, and then started a big trend led by gold stocks, silver caught on, commodities, especially the critical minerals area caught on, stock markets caught on, and off we went right into January of this year, and a very, very high risk situation for silver, for gold stocks, commodities. And here has been the very productive pain that followed. You know, you wanted to be selling here. I actually shorted SLV. I didn't short, I bought puts and got lucky on the first big tank job. Um, but that's beside the point. It's been 6 months of, or the whole year so far, of pain and degradation for the silver gold ratio, which means also for the precious metals and commodities and resources. So this is pretty important. We'd like to see this, in essence, replicate this. And if so, it's going to be party time. If not, we're going to grind some more. It's also a very socially and politically, and in my opinion, macro market time of a lot of confusion, a lot of market gyrations going on out there. Of course, we have a president in the news every day, and it's, you don't know what news items are going to erupt. New Fed chief, if you know me, you know I believe that Bessent and Warsh are hand in glove trying to engineer the situation. Tinfoil hat affixed. Okay, so did we do gold SPX? Yes, we did. And that's really nice. That is what we anticipated all these months, and it looks like it's proving out. So gold, silver, gold. Okay, next one is the cubes, otherwise known as the tracker of NDX, NASDAQ 100. So this was bearish. It resolved bearish, and it had places to go and people to see, and didn't want to continue down for a nice neat hit of support or the excuse me, the 200-day moving average. Big bounce, consolidating. Pre-market this morning, it's positive. So I'm taking it day to day, week to week on normal stock market positions, which I have a lot. Not necessarily tech, although I have tech, I have semiconductor, and I have some real out there meat and potatoes type positions, along with global as well. Increasing global exposure in line with the view that we could be changing trend, a major trend in global stocks versus US stocks. All right, nominal silver. A lot of traffic up here, a lot of resistance, beginning promptly, pretty much where it is. This is live in pre-market, by the way. So silver is up again this morning, as is gold. But come on now, you've got to get through here before any excitement it should be generated. For you trend line people, let's do this and see what it says. Oh, that's nice. Okay. So there will be some people getting excited about that. I'll keep a normal pulse rate and just note that it's not bad. It's above the 50-day average. It did break a trend line. Here's where the rubber meets the road. Let's go. Silver gold we looked at already. Potential bottoming situation. SMH, which I hold in the semiconductor area, bought it somewhere down here. It broke out of a channel, a corrective channel, and it's wallowing below the SMA 50. Take that out and it's probably going to new highs. Don't take it out and it's vulnerable technically. And then finally, SPY, which I did not mark up Don't know what that is. That's some previous trend line. But let's just leave it unmarked up. Oh, here's the other side of it up here. You know what? What the heck? I'll do something here. Support. I actually have a more detailed chart of SPX. I should have used that instead. But this shows, you know, I could have used the ES for the pre-market, but this shows the pre-market activity here. So it's a positive a bit in pre-market, as is QQQ, as is SMH. So all around, it looks like we have a positive open on the way, at least by this morning's indications. Oh, look at that. I like to see that trend break on RSI. So that looks nice too. As I said, I'm just winging this, so pardon the scatteriness of it and, you know, the little side tracks I take. We'll get a little smoother going forward. So that's just a few markets and indications that I'm keeping an eye on, and we'll talk again next time.